Good morning, traders, and welcome to this week's edition of the Underdog Weekly Perspectives Report, where we reflect on the trading week that was past and also form some views or perspectives on what we think the market is going to be doing in the week ahead. Now, if we start off and just reflect on what's been happening from a price action perspective in the past week, you'll recall from last week's video that we highlighted this move to the upside and in the deep retracement that had been playing out. And at the beginning of last week, we were around about these levels over here. And we pointed out that while we could certainly see the market rally from this level off the oversold stochastic and continue to the upside, the higher probability trading opportunity was in favor of continued downside and an actual break of this price structure level right here. And really that's what we've seen happen in the past week. The market pushed down through this previous price structure support over here fairly early in the week and then just continued to the downside all the way down. Now, the extent of the downside move has been a bit unprecedented in the sense of we've had a very, very long stretch in terms of down days playing out. The stochastic has been oversold for a very long period of time. In fact, at the beginning of last week, we actually highlighted two potential ways in which you could get involved at the downside. We said that there could be a rally up from this support level over here and then a potential continuation to the downside, forming a head and shoulders pattern, or we could just see the market push down straight through and break structure to the downside. And it's really that latter scenario that's played out as we saw the market push down and break through. Now, where do we go to from here? You'll see that I've highlighted a potential support zone, and I've actually noted that it's very wide right here. And that really takes us back to this support level, or this swing low over here, going back to the end of March, and that comes in between 44,000 and 44,700. So this is a 700 point range in terms of potential support, so quite wide. And our expectation at this stage is, you'll recall that once this price structure level here gives away, there's really no price structure support until we come in at this level over here. And that's that wide 700 point range that I'm talking about. Now, we've come into that zone, and the stochastic, again, it remains oversold, and I've made the point over and over again that a stochastic can remain oversold for an extended period of time. I will make the point that this is a very extended period of time that we've seen the stochastic sort of languish in that zone. If I look at the daily candlesticks, still looking pretty bearish. So again, from let's start putting the story together. If one looks at just the daily candlesticks, they're very bearish. Continued downside is actually what is being indicated here by the daily price action. If you look at the stochastic, oversold for an extended period of time, potentially some kind of a consolidation rally should start playing out in the days ahead. Price structure, we've got a support zone, and we're in that potential support zone over here. So certainly we could continue to the downside and break through the support zone, or we could find some kind of I wouldn't call it reversal, but some kind of a consolidation happening out of this zone. Now, from a bearish perspective, and the way we're viewing this market at the moment is, if we should start to see a consolidation playing out, what we would do is, let me just fix this up. What we would expect, or rather, is we'd expect some form of consolidation, if it were to play out, to cause the market to rally back up towards this previous price structure support, now potentially resistance, allowing that stochastic to start working off some or all of its oversold condition over there. So seeing this bounce out of the support zone, and then seeing a continuation to the downside, because I think importantly, this market has broken structure to the downside, and it is looking bearish overall. So any rally or consolidation that we see, we're going to regard as a short-term rally or consolidation with a view to finding an opportunity to get short in this market. Now, whether that is how the market moves out of the blocks this week, that remains to be seen. From a price structure point of view, from a just looking at the daily candlesticks, there could certainly just be continued downside over here. And in fact, given the width of this support zone, we could see further downside before we see any form of consolidation. But in general, the principle remains. What are we going to be looking for is we're going to be looking for some kind of consolidation to start playing out in the days ahead. And if we were to see that playing out, we would then be looking for a retracement back up towards that previous price structure support, now resistance, for an opportunity to get short and then continue to the downside. So that's what we're looking at or seeing from a price structure perspective. If we just switch over to our normalized ATR and look at things from a volatility perspective, this is actually quite a good situation over here, because we're starting to see a rally in the normalized ATR, which, as you recall, is our proxy for market volatility. And really, market volatility dropping off has been the thing that's been hurting especially intraday trend traders in terms of finding opportunities to get on a trend and stay on a trend. But we're starting to see a rally here. We're still in absolute terms at very, very low levels, but it's good to see that some life returning to the market as we're going into the winter period. So just get that up. So that's what we're seeing from price structure and volatility perspective. Let's switch over to the have a look at some of the other markets and see if there's some corroboration in terms of what we're seeing at the moment. Starting off with the Rand dollar exchange rate. As always, these are 3-line break charts. On the left hand side we have the weekly, on the right hand side we have the daily. On the weekly, nothing's changed really. In fact, we haven't had a weekly 3-line break candle since the beginning of April, so pretty much a bit of a range bound scenario playing out here on the weekly side of things, where the trend remains to the downside, in other words, in favor of a strengthening currency, although in retracement at the moment. On the daily, similarly, what we've had is we've had a continuation move to the downside playing out over here. Push down, push down, push down. We did have a rally going into the end of the week last week as the Rand weakened, primarily off some of the news around the new mining charter that's being proposed. So we do have a, from a trend perspective, the Rand remains strengthening, which adds to the case for further downside, although in both the weekly and the daily charts we are in some form of retracement. So longer term trend is strengthening with shorter term weakening in place. Then that sort of plays into the hands of our, if you think about it, in terms of our structure on the top 40, trend to the downside with potential for consolidation to be playing out. Switching over to the US markets, this is an S&P, and strength remains to the upside. As you can see, it's been quite choppy on some of the shorter time frames, but overall on both the daily and the weekly, we've still got this very strong trend to the upside playing out, and it would take a pullback or a break of structure coming down to around about 23.30 to actually change that viewpoint. So the US markets are really holding things up, holding things together at the moment. Switching over to gold, on the weekly, we've still got that upside break, that bullish break to the upside, retracement, continuation to the upside playing out, so adding to the case for potential downside on the equity front, and that's sort of corroborated by the daily as well, where we had the market retrace and then push up to put in a higher high, and is now in retracement as well. The only thing you're just got to watch out for here is this is not the greatest of pushes to the upside happening over here on this last leg up. So there's a potential for a double top there, but again, what we'd need to see we'd need to see the market, the gold market, drop below 1220 on a daily chart before we get too concerned about this. Overall, the gold is still looking quite bullish, which adds to the case for potential downside on the equity front. If we switch over to oil, weekly still trending to the upside, although in deep retracement at the moment, and that's because on the daily chart we've actually seen a break of structure to the downside. So if we start putting all of those things together, really, if one looks at it from a daily perspective, we've got oil breaking structure to the downside, which is bearish. We've got gold in an uptrend at the moment, which is potentially bearish for the top 40. We've got the rand strengthening, which is potentially bearish for the top 40. And really, it's only the US markets, the S&P, pointing to further bullish action. So on balance, things are looking a bit vulnerable to potential downside, but interestingly enough, in virtually all of those markets, we are in a shorter term retracement. If I were to drill down to say an hourly chart, we may actually see some bullish indicators playing out over there because of the retracements that are in place. So again, all of these things really point to the potential for the market to start a short-term consolidation or rally from here, before continuing the move to the downside in line with the major trends that are in place. So that is really what we're going to be looking for for this week, in the days ahead. We're going to be looking for some kind of consolidation to be playing out, and then from there we're going to try and identify an opportunity for us to get short in this market. The other thing I just wanted to highlight is just give you an update in terms of our trading opportunity that we identified in last week's perspectives report. I believe that was a long trade in Aspen. So what I'm going to do is I'm going to pull up that chart and let's see how things are playing out on that front. Right, so here we are. This is the daily chart of Aspen, and as you will recall last week, what we'd identified was this higher high that the stock had put in place, and then we'd had this retracement all the way back towards the 61.8 Fibonacci retracement level, lining up with this previous price structure over here. We had an oversold stochastic, and following this candle over here, we looked for an opportunity to get long the market. Now you'll see that very early in the week we had a break of this high watermark on this candle here, and we did manage to get our price in and get long over here. The stock or the trade really hasn't done anything much over the past week. We've bumbled along, actually had a couple of lower closes before a bit of a rally towards the tail end of the week. So really just moving sideways. But within the context of what's been happening on the overall market, which has been pushing down, this is actually not a bad performance from our long trading setup. So we're going to exercise some patience over here. You can see the stochastic is starting to rally now. We had a nice bullish candle printing on Friday. Our stop levels remain below the swing low level here, and while we did penetrate them on an intraday basis, you'll recall it's an end of day stop target, so we're still comfortable to hold our position. And really we're going to see if there's some kind of a juxtaposition between the overall market putting in a consolidation and this particular trading setup rallying from here towards our target levels. So for now we're going to continue to hold and see where things play out. And then finally, guys, what I thought I'd share with you, I share this generally with our daily subscribers only, but I thought I'd start sharing it in these weekly reports as well, is just our intraday trading system outcomes and results for the year to date. And as you can see, we had a very strong start to the year, and then we've been in a bit of a call it a consolidation, call it a downturn, over here, but now we're starting to see, as market volatility starts to pick up again, we're starting to see some good pushes to the upside. So year to date, we've done 124 trades. This is on our Heikinashi intraday trading system. We're running at a 40.3% win rate and a reward to risk of 2.14 to 1, and this is really in line with our historical long-term trends. These are the kinds of these trade setups are the ones that we put out to our daily subscribers on through our live trading communication mechanism. If you guys are interested in getting these updates on a daily basis and also getting access to our daily subscriber reports, which is gives an updated version of what you see in the weekly on a shorter term time frame, then please drop me a line, Richard at underdoginvestments.co.za, or subscribe through our website www.underdoginvestments.co.za, and I'll be happy to share this information and add you to our daily subscriber base. Guys, that's pretty much it for this week's report. As I said, it promises to be quite an interesting week if we can see the market start to consolidate from here and find a bit of its feet. But as always, let's not get too excited, especially to the long side. I know there's always an, I don't know what you would call it, but there's always a tendency, perhaps, for once we've had such a strong sell-off as the one we've seen over here, for people to try and get long as quickly and as fast as possible and to try and ride it as hard as possible. Bear in mind that we are now in a downtrend, and one should be wary on taking long positions. I'm not saying that you can't do that and you can't do that profitably, especially on the shorter term time frames, but just be careful about trying to ride those longs too far. And rather sort of err in favor of a sell the potential rallies if possible. Guys, that's it from our side. All the best for the trading week ahead, and I shall chat to you next week. Cheerio.